Hello, everybody. Welcome back to another episode of The Market Close. Today is Monday, August 26th, 3:45 p.m., even though for some of you it's 3:46 p.m., but I am here. I am on time, and it's time to discuss the broader global capital equity markets. Folks, I don't know if you went into the pool today because, sometimes you go into the pool when you want a little dippy dip. And right now in the stock market, I don't even know if you want to call it a dip, but we're experiencing a little dippy dip today in some certain names and in the broader indices, but some of them are not experiencing that dip. Tesla definitely went swimming today. Took a little dip, down 3.6%. NVDA down 2.48%. IWM, small caps, actually green, but really holding on by a thread. I mean, if you want to call it green, you can call it green, but basically is flat on the day, so not really getting too much momentum there. CrowdStrike down about 2%, Intel down 2%, SMCI, forget taking a dip. This one's drowning a little bit. I mean, this one's down 8.64%, so this one is down pretty badly today. We'll explore why that's happening. Kava continues to be up about 2.7%. Open Door up 12% on the day. Again, a lot of real estate companies getting a bid from that rate cut basically being confirmed. Robinhood down about 1%. Meta down 1.53%. Palantir, our first bit of volatility since August 5th to the downside on Palantir, down 2.9%. We have some new updates on Palantir. I'll talk about that in a second as well. SoFi holding up really strongly today, up 2.06%. Nubank up 1.25%, and then the broader S&P 500. It's down a third of a percent. You could call it relatively flat, not too much momentum. It hit 563 at one point in the morning, now at 560 as we get into the market close. So today's been pretty boring. Not that interesting. Nothing that crazy happened in terms of news. We got a couple of pieces of macro news that I'll talk about in a little bit. Oil obviously was rising this morning for a variety of reasons. Oil now nearing $80 at 77.18 on WTI, and Brent crude above $80. But outside of that, nothing too crazy. Now, real quick, one piece of news that happened right before I went live is that Tulsi Gabbard officially has endorsed Donald Trump to be president. So just like RFK Jr., you can find a lot of quotes by Tulsi saying some really nasty things about Trump. They don't agree on every issue, but it is really telling that both her and RFK are not endorsing the DNC. Tulsi used to be a former Democrat, and RFK Jr. wanted to run as a Democrat in the 2024 election. Now, with 71 days left, Donald Trump is leading Kamala Harris in 4 swing states. He's leading in Georgia. He's leading in Georgia, leading in Arizona, leading in Nevada, leading in Pennsylvania. He is losing in Wisconsin and Michigan. So I don't know if this endorsement is going to have that big of an impact in terms of the overall perception of his presidency. The RFK Jr. one, I think, was a little bit bigger for him. But this does affect markets because if you assume that the market will do better if Trump wins, then this might potentially be a way for Trump to gain some momentum. If you think that it really is not going to have an impact, then ultimately we're going to have to see what happens in November with the broader election. But that is one piece of news that happened just when I was about to go live. Thank you, everybody, for being here. June, Matt, Doug, Thomas, Mike, what's up? What's up? Thank you all for being here. David, Adam, Vibob, Akshat, John, Ermel. Big thing for today that I think is really important to discuss, and it's the same thing I talked about in the morning, is the unemployment numbers. I looked at a lot of different analysts, a lot of different news. I read a couple different reports from JP Morgan, Goldman Sachs. It doesn't seem like I was that wrong to stress about unemployment this morning, because from what I'm reading, and at least what the equity analysts are saying and what the banks are saying, that is where the focus has fundamentally shifted. It is like literally shifted on to figuring out if unemployment is going to be as bad as we can expect. Now, Fed's Mary Daly, one of the Fed presidents, she did give us a quote today. And this, again, goes in junction with the labor market. She said, it's hard to imagine anything could derail the September rate cut. She is the San Francisco Fed president. So as soon as she said that, you would expect the markets to get excited, but the markets really didn't care because the rate cut is so baked in. There is so much momentum behind the rate cut. Further confirmation is just like confirmation. It's not really anything new. So the market doesn't really care. What I am looking for on the August jobs data, which should be coming out September 6th, 10 days from now, circle that on your calendar, September 6th. That is going to be one of the most important days in the stock market. And I know I've been saying that for every single day where we've had big data come out. But that's going to be one of the most important days. And the reason that's going to be one of the most important days is because that jobs number, if we are closer to 150,000 jobs versus July, where we added 114,000, then we're going to be good. If we are not at that level, things are going to get a little icky. And so we need to add more jobs. We need to add more jobs. We need to make sure the labor market is not cooling to such a degree that the Fed has to raise by 50 basis points or cut by 50 basis points, because I think that's kind of admitting that they're too slow. I think a slow, gradual rate cut process is what the market needs. It's how the market will inevitably have, hopefully, this kind of bull rally, melt up rally. But jobs is going to be the most important thing to either derail that or hypercharge that. And so we're going to see how that ends up playing out. Let's listen to a little bit of analysis from CNBC. I thought this point also hammered the argument around not only NVIDIA earnings, but also what it means for NVIDIA to report in a struggling macro, specifically around the labor market. And then we'll keep going from there.
The stuff that's been broadening and actually the market cap weight. I think that NVIDIA, I'm not surprised it's down today. Who's going to take a new position in NVIDIA after all this hype and all this pomp? And so I think that you have a tiny bit of a sell-off today. But I think NVIDIA's earnings on Wednesday are going to be an incredibly important gauge of sentiment in the market around this trade in general.
I mean, you had your chance kind of at NVIDIA, you know, 20 bucks ago,
right?
25 bucks ago.
Mm-hmm.
And it speaks to the way that a lot of these stocks have rallied back. So now the pressure is really on. You got to live up to the bounce back that we've had. As we said, the Dow hitting a new closing high today.
So NVIDIA is this unique, one-of-a-kind animal. I don't think we've ever had a company of this size. 2 years ago, they had full year fiscal revenues of $6 billion. As of last quarter, it was $26 billion. That's up, almost 7 to 6 times. Their stock's up 600% in 2 weeks. So this earnings have actually backed up all of this stock market appreciation. But do I think that NVIDIA is going to go now from 28 billion, which probably where they come in 28.8 for full year, is going to now go up another 5 or 6 times in revenue? No. I mean, and so they had a step function up. The stock and earnings followed each other. But now you will just see that growth coming down and leveling off. And that's where I say I think this is a lot about sentiment and how people digest slowing growth, albeit huge, moving forward.
You had a Freudian slip there. You said 600% in 2 weeks. I know it feels like that when this stock moves.
Yeah.
I just know people are like, no, not two weeks, 2 years. But your point is well made, because it does.
If NVIDIA goes up 6x in the next 2 weeks, dude, this market is going to go to the moon.
Feel like that. Okay, Powell. Fed's out of the way. Why do you make that face? Like, do we don't have to worry about it anymore? Are you still a little iffy on what lies ahead for the Fed? How are you seeing this now?
Well, I'm always iffy. There's a great saying that economic expansions don't die of old age. They get murdered by the Fed. And so right now we're in a soft landing scenario. But what does concern me is that if you look over the last year, 82% of all jobs growth was government and education and healthcare.
This is an important point.
That is not a healthy jobs market. Historically, those are much smaller percentages. And so I just don't know what percent of this jobs growth going forward, if we have less government stimulus, which I think we all know we need to have to be a responsible country, what's going to happen to the economy? And I think that, to me, one of the most important numbers will be September 6th when the unemployment comes out. Unemployment come out the Friday after next. That, to me, is going to be a sign of, do we continue to get a broadening, or all of a sudden, if jobs come out worse than expected, that's going to call into question the Fed was late in cutting rates.
So that's the point I kind of wanted everyone to hear. I mean, at the end of the day, yes, the job growth that we've had, a lot of it has been governmental, and we need a little bit more in the private sector. All that is fine and dandy. The market just needs that top line number. I mean, I don't think the market's going to care about all that nuance. They just need that top line number to not be horrible. And that top line number for me, September 6th, 150,000 jobs. July, we added 114,000. If we had 150,000, I think we're going to be good to go. Again, the reason I keep stressing this is because I'm in the bullish camp. And in order to remain in the bullish camp, S&P right here at 560 as we have 5 minutes into the close, we need unemployment to not dramatically go up. I don't think there is enough data that suggests that unemployment is going to go up to such a degree that we end up going into a recession. That's what most of the bears, most of the bears that at least I listen to, that is their core thesis. I think they're wrong on that. And I think that thesis is a little, it's just that they're trying to find the argument for why the economy has to be in a recession, and they're using unemployment as the reason, which is a good reason. But I think they're stretching the reason in terms of how high unemployment goes. Now, I might be wrong and the bears might be right, but from the data that I'm looking at, unemployment is not going to reach those types of levels, which means if it doesn't reach those types of levels, we should be good. And the rate cuts should stabilize most of the economic activity. But if it does reach those levels, then we're in a tough situation. So I think we're going to have to see how that plays out. But September 6th, that's going to be the biggest thing. And again, I think that's more important than NVIDIA earnings, because NVIDIA, they can put up great numbers. But if the market prices in a declining economy on September 6th, then that's going to be tough for the entire market to reconcile with. So I think that'll be fine. And I think NVIDIA earnings will be good. And both of those will compound against each other, even though September will be volatile. But overall, those are the numbers that we really do need to care about. ELF is still down 8% on the day. If anyone found a reason for why ELF is down, please let me know, because I did not find one all day. SMCI, the only reason I can say why it's down 8% is because of NVIDIA. NVIDIA down 2.24%. Remember, SMCI at the end of the day, when people talk about bubble AI stocks, I'm not saying SMCI is a bubble AI stock, but it has the characteristics of a bubble AI stock because it's a hardware name. They don't have software margins. They're growing like crazy, but their growth is slowing down in terms of the overall rate of growth, even though their growth is good. AKA, they're not going to be growing at triple digits next year. Now, they did raise guidance, which is good. If they come in on the top end of that guidance, that might surprise everyone. But at the end of the day, their gross margins are not good. They're 11%. And so you might have people waking up thinking, oh, well, we think the economy is a little weak. We think, we're a little scared of NVIDIA earnings. We are a little scared of unemployment. What are we going to sell off? Let's sell off some names that we're up big on, AKA Palantir. We talked about, that's why I think Palantir is down on the day, 3%. People are sitting on fancy gains on Palantir. They don't really understand why they're up so much on Palantir, so they're taking some profit. Same thing with SMCI. You don't really know why you bought it, but you did buy it. It's up a lot. You probably are still up on the position if you didn't buy at the top. Therefore, you're just going to shed some profits on a day when NVIDIA is down. So I don't think SMCI is a bubble stock in AI, but I think it can be interpreted as a bubble stock. And the reason it's not a bubble stock to me is because if you look at its PE in comparison to its actual growth, you could argue at this price it's relatively cheap. The problem is if they're not making that much net income, they're not going to have that much earnings growth in general, then it's just harder for the street to project out what earnings per share multiple do you put on it going into 2026, even if they hit the top end of their guidance, which is closer to 26 billion. So that's why it gets a little bit of a haircut. Now, granted, buying the dip on SMCI has done well. Will it do well before NVIDIA earnings? I don't know. Because if NVIDIA tanks 10%, SMCI is probably tanking, 10% or more. I think everything on the semis rests on NVIDIA. If we look at the semis right now, all of them have had a pretty rough day. Yeah, it's definitely a bloodbath. AMD down 3%, SMCI down 8%, Intel down 2%, Qualcomm down 2%. Broadcom is one that should do very well if NVIDIA does well, but it all is contingent on NVIDIA. Broadcom down about 4.2%, Micron down 3%, Dell actually holding up okay. Wow. Dell holding up, or Dell barely down 1%. Dell down about 0.5%. ARM down 4%. You guys know how I feel about ARM. I think it's ridiculously overvalued, but that one falls as NVIDIA falls. So all of this is the pre-market volatility before NVIDIA earnings. I told you guys this in the morning show. I sold some calls and I made $5,000 of profit in February before NVIDIA earnings, because I was like, oh, I should raise cash because NVIDIA is crashing, right? That's the responsible thing to do. Then NVIDIA crushed. Those calls went up to $50,000 of profit, meaning I left $45,000. Honestly, more but a month later, it would have been worth 50. If I waited 2 months, it would have been worth 80,000. But I lost a lot of money on those calls. Or I didn't lose money, but I missed out on a lot of money. And I only sold those calls because I was afraid NVIDIA was going to tank the market. NVIDIA didn't tank the market. It tanked the market for 3 hours on that day in February when I thought I needed to raise cash, but that's not what happened. So I'm curious if that happens again. Now, NVIDIA's in a whole different situation. At that time, NVIDIA was $60. Now NVIDIA is 126. So I don't know if NVIDIA necessarily, the volatility to the downside is going to lead to a massive upswing as if NVIDIA crushes. That, we're going to have to wait and see on Wednesday. But the point is, volatility on a day like today and tomorrow leading into NVIDIA earnings, and Wednesday from 9:30 to 3:59, that is to be expected with NVIDIA. 4 p.m., August 26th. Thank you, everybody, for being here. The stock market is now closed. All right, let's see where the market ended out for today. Thank you, everybody, for being here. If you're just joining, semis all took a crap today, unfortunately. Now, one thing to remember is that semis have been up a lot over the past month. Let's just look at the SMH index. This thing over the past 1 month. Okay, so it's up 1%, but that's a little misleading because it's going to July comps. But if you look at it from August 7th, it's up a lot more. August 7th, it was 211. Now it's 242. So a lot of these names really have to be judged in the context of August 5th, August 7th. But semis, they were up a lot over the past couple of weeks, and now they're taking a little bit of a break today. Same thing with the Mag 7. Apple ended up just slightly on the day right at the close. Apple did release that September 10th. They are putting out the new iPhone. So we're not going to stream that event because Apple will copyright the channel if we stream the event. But on Twitter, I'll be talking about the event live. So we'll cover it after the event happens. But September 10th, that'll be the day where we get the new iPhone, new iWatch, all that stuff. Their theme is it's glow time. I don't know what the hell that means, but that's their theme for the new event. Microsoft 413, Meta 521, Google 167, Amazon 175, NVIDIA 126, Tesla 213. Tesla and NVIDIA both took the biggest beating today, but I think Mac 7 taking a break today is not bearish. It's actually very bullish after the past 3 weeks of them rallying upwards of 30%. So I think Mac 7 taking a little bit of break is pretty healthy for today. Crypto, we've got Bitcoin. It's still holding 63, which is not bad. Not bad at all at 63,000, 63,332. It's down from 64, but it didn't break below that 63 level. I think it touched 62 for a second and then came right back. So Bitcoin having a good day. MicroStrategy down about 2%. Robinhood down about 0.76% on the day. Bitfarms down 2.4. Coinbase down 3.5. And then CleanSpark down 3.5. Really, none of these Bitcoin proxies are going to get a ton of momentum, I think, besides Robinhood, because crypto is a smaller part of their business until Bitcoin takes off. I do think this is the time for Bitcoin to take off. I think rate cuts are going to unlock massive levels of liquidity, which are going to be good for Bitcoin. There's another piece of bullish economic news that we're going to look at in just a second that is good for Bitcoin, but the broader market as well. But in general, that rate cut should hopefully be beneficial for the broader market. SoFi ends the day up 2%, 767. I think it topped out at 778 on the day. Not bad on SoFi. I still have my sister's calls on SoFi, and I definitely thought of selling it today, but then I also thought, well, wait a second. Like, they're $7 strikes with a $12 sold on top of them. So I mean, if this thing just gets to $8 or $9, I can make double my money. Do I think SoFi gets to $8 or $9 by the end of the year? They expire in January. Like, I don't know, dude, but I feel like at this time we should just go down with the ship and see what happens. Like, because I feel like everything is set up for SoFi to finally do well and break out of this 3-year range. So if there was any time you would wait on this, I've waited a year already. Might as well wait now. I also think it doesn't go below 7 by the end of the year. So if that's the case, hopefully those calls will still be in the money. And again, this is basically house money because we sold half of it in July of 2023. So, I mean, if it all goes to zero, then it all goes to zero. But I don't think it goes to zero, dude. I think SoFi ends the year closer to 850 and 9. And so we're holding on, and let's see what happens with SoFi, because that can do very well if we get some more momentum. Kava ends the day up about 3%. PayPal had a little bit of a red day. Well, not red, but it's green, but it's flat. It was at 73.25, so it broke 73. Now it's at 72.04, up about 0.5% on the day for PayPal. Yeah, there's that red candle from 73 all the way down back to 72. GameStop red on the day. This is just the saddest situation in the world, dude. I don't think there's any catalyst for GameStop. I'm sorry if you have a ton of GameStop, but I just don't see the momentum play on GameStop. Down 4% of the day. If GameStop can't rally on the inevitability of rate cuts, like, that's the only reason SoFi is going up, by the way. Like, the market's pricing in, all right, their business is going to grow. They're going to grow top line revenue. They're going to be more profitable. They're going to beat expectations. They're sandbagging a lot of their guidance for Q4 because we're going to get a rate cut. If GameStop can't get even a rate cut pump, then I don't know what pumps GameStop, especially because Roaring Kitty is nowhere to be found. So that one's just in a tough situation. DraftKings, that's down 3.5% of the day. Ulta was down about 1%. Clover, this one was up a lot last week, flat on the day. Disney up 1.35%. Another firm came out and they upgraded Disney and they said the content business is doing well. I don't know if that's the best thesis. They said we're bearish on the parks, we're bullish on the content. I don't know, dude. That's just not the most bullish thesis to me in general, but I think it was Goldman or Oppenheimer. I'll get the exact firm, but they came out and they upgraded Disney to 105 on their price target. Amazon, yes, Amazon was down for the day. Amazon here at 175, down about 1%, and then Palantir right here down 2.94% on the day. Okay, let's look at some other bullish news that I found today in terms of researching elements of the market that we might not know about. I learned about this today as well. Does anyone know what a junk bond is? Because I found out what it is today, and apparently junk bonds going up is super bullish. So the ticker symbol is JNK. That's the actual ticker. And that is up 2.3% over the past 3 months. Now, that may not sound like a lot, but given the nature of the financial instrument that a junk bond is, that's actually really well. So what is a junk bond? It's a high yield, high risk bond issued by companies with lower credit ratings. So a company that's like not, the Google of the world, but a company that's growing. They're just, they got like a B minus from Moody's in terms of their credit rating. They're not the best company in the world, not the worst company in the world. They would issue a junk bond. And what that means is it means essentially that we're in a bull market if junk bonds are starting to go up. Now, why is this the case? Well, a couple reasons. Number one, it means investors are willing to take on more risk for yield. So you are willing to depart with some of your money from traditional equities or money market funds and put it into these junk bonds, essentially allowing your capital to finance some of these companies to be able to finance their debt or their operations, whatever it may mean. But you get a better yield than you would get on a traditional bond or like a traditional T-bill or 10-year or 30-year T-bill with the United States. Companies also issuing junk bonds means that they want to access more capital, which means capital is flowing and available to be allocated, which it's kind of circular. Like junk bonds can't go up unless there's more capital to allow those junk bonds to even have the potential to yield anything. So the fact that the yield is higher means that the capital is flowing. And if the capital is flowing, that means it's available to be allocated to some of these more riskier companies, which is bullish because that's not what happens in a bear market. That was not happening in 2022. Usually you see higher yields on junk bonds due to a lower rate environment becoming more prevalent, which we're supposed to be getting a rate cut hopefully soon. And then finally, it means more liquidity is entering into the system. So junk bonds, the reason I want to bring this up, they're closest to their highest level in 2 years. It has been 2 years, as you can see right here on this chart. From 2021, they were really high. Then they came all the way down in 2022. Then they basically stay stagnant from 2022 to 2024. And now they're gaining some momentum. You would not see this happening in a bear market. You do not see high-risk companies issuing high-risk bonds with obviously high, like better yields that are, you have to attach more risks to be able to get that reward on the yield because the company could go bankrupt. But you wouldn't see the financing of those companies if we were in a bear market. Similar to IPOs. Now, I think you need a lot more liquidity for IPOs to start happening. And we haven't seen a lot of IPOs really in the past couple of months. Bill Ackman canceled his IPO, a month ago, but it is good to see that there's more momentum. And that momentum obviously is very bullish for the broader market because it means that there's more liquidity flowing around. So junk bonds, not the worst thing in the world. Brandon says, be fearful while others are greedy. Well, that brings up a good point because the fear and greed index, as we transition from junk bonds, which are definitely an indication of a bit more greed because people are willing to take on risks to get a higher yield in a company that's probably not going to, or that historically has not done that well, which is the nature of taking the risk. We are back into greed, folks. 57 on the fear and greed index. So, I mean, exactly what I just said about junk bonds kind of proves that we're getting more greedy. If you're willing to get yield from a company that's not that good, that has a bad credit rating, just to lock in a higher yield via a junk bond, it's a little bit more greedy behavior. And this typically means you tend to see a little bit of market volatility, which is what we saw today. We saw some people selling, taking profits. In general, this is not the most academic index, but honestly, it just works, dude. We had extreme fear on August 5th. You bought the dip. You've done very well. Now we're pretty close to all-time highs. We're finally into greed on the fear and greed index. I think NVIDIA earnings and the jobs report in September is going to take this to neutral fear or greed over the next couple of weeks. I don't think we get to extreme greed unless we hit all-time highs, and I don't know if we hit all-time highs this week. Maybe that ends up happening. Goldman Sachs actually did say the S&P is probably going to hit all-time highs this week, so if that happens, I would imagine we get closer to extreme greed. But if not, this is just like a basic indicator to say, hey, things are a little bit overheated right now, and taking profits is not the worst thing in the world as well. Now, granted, I still think there's a bull market into the end of the year. So, taking profits is fine. I think getting out of the market is not, at least that's not what I'm doing. But, that is one thing that people are considering, given the fear and greed index is going a little bit higher. Goldman Sachs. So a couple quotes I want to read to you guys. Goldman Sachs said, we continue to expect that the August employment report will be stronger than the July report and that the FOMC will therefore deliver a 25 basis cut in September. This is what we want to see. We absolutely want to see that September, we get a 25 basis point cut, not a 50 basis point cut. Why? And we'll hear from a former Fed president in a second, because I thought he had some interesting insights as well about how the Fed should act. But if they do 50, it means that things are getting weak, and we'll obviously see it in the jobs data. Like if the jobs data comes out and it's like way worse than expected, forget 114,000 jobs, maybe we only added 80,000, 90,000 jobs. The Fed has no choice but to cut rates. And then hopefully the market just naturally, because asset prices or asset equity premiums will get a little bit more inflated because rates come down that aggressively. That is a Goldilocks zone where you can like get some appreciation in the stock market. But in general, that becomes a question of if we're getting a recession or not. And so that's why Goldman said, hey, we think the August report is going to be good. So the FOMC is only going to cut by 25 bips, which is going to be a normal, stable path. If the August report is bad and we cut by 50 bips, then really I have no idea what's going to happen. But one could argue it's more likely going to be bearish than bullish. So that August report, I cannot stress how important it's going to be in regards to volatility and in regards to the unemployment and overall labor market. Another chart that I thought was interesting right here, NVIDIA has moved the S&P 500 by 1% plus in a week all by itself. So if you look at, this is a historical chart since NVIDIA went public from 2000 to 2024. NVIDIA has had for the broader part of 20 years really no impact on the volatility of the S&P 500. Now, in the past week, NVIDIA has had a massive impact on the S&P 500, and this just goes to show how incredibly important earnings is going to be. If earnings is good, S&P probably moves up with NVIDIA. If earnings are bad, both of them take a little bit of a dip. So all of that is going to be really important when it comes to understanding what happens with NVIDIA. Some data on mortgage rates. 91% of outstanding mortgage rates are below 6%, 82% are below 5%, 62% are below 4%, 23% are below 3%. I think my parents are in that 62% range because I think we got ours at 3.5%. So one of the things we're looking for to also stimulate the broader housing market, which we did get new home sales data that was better than expected on Friday at 3.95 million versus 3.9 million. Slight beat, but still a beat nonetheless. That's why we're seeing the home real estate companies, the home builders, et cetera, Lennar, Open Doors, Zillow, et cetera, catch a bid, is because the market is expecting, well, when you cut rates, you're going to get mortgages to come back down below 6%. Right now it's at 6.3. And if that happens, people that have been just waiting to either sell their home or buy home are finally going to get into the market. Now, does that unlock that much demand? I don't know. Does it unlock that much supply? I also don't know. But if the market thinks that 25 is going to turn into 75 and 75 will turn into 125 bips, then that probably gets people a little bit more excited. That might get people waiting on the sidelines until rates really come down more aggressively in mid-2025. But that is one thing that'll probably open up the housing market and be good for the broader market. So another bullish thing that we're waiting on when it comes to that rate cut. Where is Rocket Lab ending on the day? Rocket Lab down about 3.16%. Rocket Lab for the month, let me check it for the month. Rocket Lab for the month is up 25%, year to date up 26%. So it makes sense. You're going to see a little bit of volatility on a company that's up 25%. Palantir again ending about 3% on the day. Tesla ending 3%. NVIDIA now green after hours down about 2.25%. Fortinet up a little bit on the day. Snowflake actually had a decent day back at 118, up 1.85%. At one point it was at 120. Kind of weird that the market sold off NVIDIA and bought Snowflake today. The only reason I can imagine for that is because Snowflake fell 15% last week. NVIDIA was basically up 15% last week. So a little bit of a reversal there. But it is kind of weird going into one of the hottest prints of the year that the market decides to buy Snowflake and sell NVIDIA. Now, granted, this is what happened in May. This is what happened in February. NVIDIA fell right before earnings. Then they crushed earnings and then they go up 20%. Does that happen this time? We will see. But market is definitely acting the same way they've acted the previous two times when it comes to NVIDIA. Your thoughts about Palantir dropping? Good question. I talked about this morning. I'll just show my tweet on this because it was a simple take I had. I think we're being a little spoiled as Palantir shareholders on this idea. So I said, the first taste of volatility, Palantir got to the downside. We've been volatile, but only to the upside. This is the first day we actually got some downside momentum, and the taste was 2%. I think we ended the day down 2.9%, so call it 3%. So I think we are very spoiled. I think a range of 25 to 35 is very realistic for the rest of the year. If a bad macro, meaning the jobs report is bad in August, we go to 25. If everything is stable, plus we get a 30% growth quarter, which means we're looking at $725 million of revenue in Q3. I think we likely end the year closer to 35. And I think that's very reasonable given the stock was at $16 in January. So if we end the year at 25, I am not going to complain. In fact, I will buy that dip all day, whole day, every day. If we end at 35, then I'll be very happy because the stock was at $16 in the beginning of the year. So I do think expectations have to be settled a little bit unless we have a blow off the top rally, which is possible. Palantir's probably going to chill out in this range, just given it's up so much. And I think that's very healthy. To see Palantir go to $40 tomorrow, not healthy at all. The fundamentals don't justify it. I think it needs some time to chill. But I think if you bought at 32 and you're like upset that it's at $30 right now, you just got to have the mindset that you're going to have to DCA. I mean, if you bought it at 32 expecting it to go to 40, I'm sorry, but if you watch my videos, that's definitely not the vibe hopefully you got from my videos. My videos are way more oriented around the actual fundamentals of the business, along with acknowledging there is a cool premium, is what I call it, that gives Palantir its momentum, but that's not enough to overpower, like actual fundamentals, because it's already overpowered on actual fundamentals, right? Palantir's trading at a 30 times price of sales. To say Palantir's going to trade at a 50 times price of sales, like that's just a little tough to ask, right? So I think 25 to 35 is going to be the range, and as long as it stays in that range, then Palantir should do well. Mayor says, is it true that Robinhood, you do not pay interest if the margin is being used for options collateral? Your thoughts? Yes. So on Robinhood, if you take out margin, and it's not just Robinhood, it's on Schwab, Fidelity, etc., you can sell options on margin, meaning you don't pay interest on the money you're using to sell the option. So for example, if I'm selling a cash secured put and I need to secure $1,500 for the cash secured put to generate a premium, on any brokerage, not just Robinhood, you can borrow $1,500 in margin and not pay interest on that margin. This is actually not it's something I learned about this year, but this is just good for the brokerage because that means they have more trading. That means they encourage you to like engage with their platform more. And ultimately, like legally, you're not actually borrowing the money. You're like technically borrowing it, but you're not using the money to buy equities. You're kind of using the money as a placeholder, aka it is cash secured inside of a cash secured put. Now on Robinhood, the only difference is when you sell options on margin, your cash does not collect the 5% interest that it was collecting before. I think that's the difference between Robinhood and Schwab and Fidelity. On Schwab, you can sell puts on margin, but still have your regular cash, and that cash is collecting an APY. On Robinhood, you're not collecting any APY. So as Matt Money says right here, you only pay the interest on the margin if the trade gets executed. So for example, if you have a $1,500 cash secured put, you put up $1,500 in Robinhood's margin that they gave you. You don't pay any interest on that. Let's say the month expires, but then the put is in the money and you have to buy 100 shares at $15, but you don't have $1,500. Robinhood will then use $1,500 of the margin they gave you to actually buy the equities that you're contractually obligated to buy. And then you will have to pay 6.75%, which is Robinhood's lowest interest rate, to borrow that $1,500 to be able to execute on the trade. So, it is advantageous to be able to sell options on margin because you don't have to pay interest on it. However, there are massive risks to that. And one of the biggest risks is that if you end up getting assigned on that trade and you didn't effectively roll, your stock tanked 40% and now you're deep in the money. You need to have the money to be able to pay for that, to ultimately cover the collateral that you were using the brokerage's margin to be able to do. And if you don't have that money, then you have to pay interest on the margin. So that's just one thing to watch out on if you use a brokerage's margin to collateralize your options. And this only works with cash secured puts because you can't really do this with cover calls because then you have to buy the equities. So you have to legit, you have to have 100 shares unless you're doing a naked cover call, which I don't recommend, but you have to have 100 shares to actually sell the covered call against, which means you have to like use your own money or you have to borrow money from the brokerage, which at that point you're paying interest to be able to buy the shares. So it works for cash secured puts. I think it can be effective, but you have to understand the risks because if the trade goes against you, which it could go against you, right? Like on August 5th, I'm sure a lot of people, just look at TJ. He had tons of puts on margin and then everything fell 20%. He probably owed a couple $1 million. Thankfully, everything recovered. But if he had to put up that money, he would have the money to put up. It would suck, right? Because you have to put up all that money. And so that's the one thing you have to be concerned about, or at least cautious of when you sell puts on margin. Okay, let's listen to the former Fed president and see what he had to say about what he thinks Jay Powell will do, what he thinks the Fed will do. I thought he had some unique insights here, and then we'll keep going from there.
The correct size and pace of rate cuts in the months ahead. Joining us now, Robert Kaplan. He's Goldman Sachs Vice Chairman and, of course, the former Dallas Fed President. Mr. Kaplan, welcome back. It's nice to see you again.
Good to see you, Scott.
Our prior guests during our market conversation a few moments ago have doubts that Mr. Powell can pull this off. You share those doubts?
No, I think they have a reasonably good chance to pull this off, meaning a soft landing. First of all, we're running 7% of GDP deficits fiscally. In other words, a historically high deficit at a time of full employment. Some of that's higher interest, but some of it's higher spending. And I think that's giving some resiliency to the economy. So I think in Jay Powell's speech, he made clear they're going to move in September. He left his options open as to how much. He made clear that they're going to balance employment and inflation, and they don't want let the job market get any worse. And I do think we're going to find out from the August jobs report, there's a reasonable chance that may actually be better than people think.
See, again, dude, everyone keeps mentioning this August job report. I cannot understate how important that number will be. If that number comes in cold, we're good to go. We're going to have a bull market. If that number comes in hot, it's going to be a little tough to navigate.
So I think we've got a reasonable chance to navigate this. And if the economy turns out to be weaker than I just said, then the Fed can do more.
You think they should go 50 just to be safe?
I think a lot of it's going to depend on the August jobs report. And so I would withhold judgment on that if I were in my seat until we get to the first week in September. And again, if that job report is weak, they'll go 50. If it's stronger than people are expecting, which is a possibility, then I think they'll go 25. And they'll do that in order to move more deliberately and be able to control the pace.
But see, that speaks to one of the criticisms now, doesn't it? That they're too data dependent at this point, that they're already way too restrictive. So why not act faster to bring the rate back down?
The fact of the matter is, if they're late, in my opinion, they're late by a meeting or two, but that's not even clear. And this is actually, there are times where the structural drivers, I think, ought to take more precedence. The amount of fiscal spending is one of those structural drivers. I think when you're tweaking, whether it's 25 or 50, and how fast you want to get the next 75 basis points or 100 basis points of cuts, I think actually looking at data and how it evolves is actually not inappropriate. So I think they've got the balance about right, actually.
But you still sound like your principal concern in all of this is the still rising deficit and the cost of funding it and the impact that that's going to have on interest rates in the future.
Yeah, I think I have a couple of concerns. One, in the near term, I think the economy is weakening. Anything interest rate sensitive is weaker. The jobs market is weakening. We needed that weakening to offset some of this fiscal spending. And so I think we've made enough improvement that we can start cutting rates. But yes, secondly, I think the big issue over the horizon, the debates won't be about monetary policy over the next year or two. I think they're more likely to be, how do we deal with debt to GDP that's over 100% in an aging economy? How do we get higher growth? How do we get more productivity? How do we deleverage? And I think that's more about fiscal policy. I think the Fed's got a runway, in my opinion, to get a couple hundred basis points of cuts over the next year and a half, 2 years. I mean, the pace we'll figure out, but they'll do their jobs. I think the bigger issue, we've actually got a glaring issue on fiscal, and I don't think it's being focused on right now.
I mean, we know.
So again, it really, really, really comes down to unemployment. I'm going to try to find a lot of data over the next couple of days that gets us closer to understanding what's going to happen with unemployment. But that jobs number, man, just like we used to like obsess about CPI and we're like, it can't be 4% or it has to be under 4%. You know, like last CPI, we were like, oh, well, it has to be, if it's under 3, that's nice. If it's not under 3, it's not the end of the world. It came in under 3, which was really nice. This jobs number needs to be good. It needs to show that we are adding enough jobs in the United States. I mean, let's ask. So I just asked the poll in the chat if NVIDIA dumps or pumps. Let's see what you guys think. But let's ask another anecdotal question. Let me see what you guys say. Do you feel people around you are losing their jobs? Have you yourself lost your job? And do you think there is more unemployment around you? Like, do you feel that there is more unemployment around you? I am not the best gauge on this because I'm home all day and I don't like going to an office and I don't like I talk to a lot of people every day, but it's not like, it's not out in the real world. I'm like on social media all day. I'd ask my dad about this because he, goes to a lot of supermarkets and he does a lot of stuff there. And I asked him, hey, do you feel like people are losing their jobs? And he's like, no, not really. He's like, I haven't heard like mass layoffs and, like he hasn't heard of any of that stuff. So I'm curious what you guys have to say. And then if you say yes or no, give your reasoning. Like, did you talk to your friend? I know some of you have messaged me that said some of the retailers you work at, they're starting to lay off more people. They're starting to adjust the scheduling. Restaurants. Like, I am very curious kind of how people are thinking. Vibop says, I work in the software industry. It's brutally bad in my line of work in my company. I've gotten the same anecdotal evidence from some other people that work in tech that are saying it is very difficult to find a tech job right now, which makes sense. A lot of those tech companies are pretty fully employed after hiring a lot in 2023. And so now it's just about, for them becoming operationally efficient, but it's not like they're not hiring people. It's just probably not at the pace that it was back in 2021. Akshat says, I definitely see unemployment is high. I know people graduating and finding it hard to find jobs in the US, and that too in fields like data science. Well, see, I said this right before I even read your comment. Yep. I think in the tech sector, it is definitely getting a little bit harder to find jobs. AI Money says, people around me are not losing their job, but I've seen companies eliminating roles as people leave. CNBC actually had a good piece over the weekend on YouTube about the rise of ghost jobs that are becoming a bigger phenomena. And the idea is you apply to a job and it never responds to you, and they take your information that you respond with, and they use that data to form better job listings, but there was never a real job in the first place. I'm really curious how many ghost jobs we have, dude. I'm really curious, because if we do, and it's kind of under our nose and we don't know that there's that many out there, that could be another lagging indicator in regards to unemployment continuing to rise. Chris Link said, I recently quit and they are not replacing my position. Okay, so again, same stuff from a lot of people saying that it is harder to find jobs. Flow Sound says, in the arts, it has been a recession. There is just not enough work where there used to be, but the peak of that was in the winter and spring. Summer has eased a lot and the outlook looks better. Carlos mentioned this as well a couple of months ago. Carlos works in the film industry, and he was citing that AI is legit becoming a reason why some of these studios are not as excited to hire people in the creative arts, because AI can do a lot of work that they used to do. So definitely, I would imagine in more creative fields, AI is becoming dude, I remember when I was, in college, I would have these little ideas. I would hire a graphic designer here and there, even on Upwork or Fiverr. Now, if I have an idea for a graphic design, I just go to ChatGPT or go to Grok and I say, hey, I'm thinking of this image. Show me what it looks like. And then boom, you have your logo right there. So it's definitely, I do think AI has commoditized a lot of the service work that some people used to depend on. Richard said 4 buddies lost their jobs in the past 3 months. Steven says it's more people are being given part-time and cut hours to save on benefits. That makes a lot of sense. Companies think they can get away with that instead of having to pay full benefits. Yeah, dude. I mean, I think there's a lot of anecdotal evidence either way, to the upside or to the downside. But I'm just hoping, dude. A lot of people are saying the jobs report is going to be juiced. Even if it's juiced, man, I'll drink that juice. Honestly, let's get through 2024. Then you can give me all the bad news in 2025. Juice it up. I kind of don't care. Just don't let this market go to shit. I'm being hyperbolic here, but I don't know, man. If they already juiced up the past 10 reports, what's another couple reports until we get to the end of the year? Let's all take our profits in January and let's lay back going into 2025. I mean, at this point, fuck, man, if everything's fake, let's just keep the lie going on until the market collapses. I'm kidding here, but the BLS revision of 818,000 to the downside, that obviously wasn't good. But because that happened, I think the worst of the whole fake jobs stuff has started to when you lose 1 million jobs, I don't know how much more worse it can get, right? We lost 800, the BLS, which gets 775 million from our government. I looked that up over the weekend, that reports the revision 45 minutes late and then is wrong by 818,000. If that's not enough to really tank the market, because the market swallowed that up and just moved on, then I hope a weaker jobs report in August is also not enough to tank the market. I just hope not. I really, really hope not. Lots of offshoring on jobs as well. Yep, that is also happening as well. And, if we increase corporate taxes rates to 28%, I mean, dude, I'm still studying the relationship between taxes and, I'm doing a lot of research on what happened in the Obama administration compared to what happened in the Trump administration. I'll probably be good to do that comparison probably Thursday or Friday, but I'm looking at a lot of data right now and I'm trying to really see what actually helped the stock market in 2017 to 2020 explode, because the Trump tax cuts were part of it, but there were other factors, and that China trade war almost collapsed the market in 2018, but then 2019 it was able to be resolved. So, because now I'm thinking, all right, what if Kamala does win, right? What if she ends up winning? How is the market going to react to 28% corporate tax rates? because even if that doesn't get passed for like another year, that's going to be that's going to be an overhang on the market and uncertainty on the market that the market's going to have to resolve. And I'm trying to figure out, can the market just eat that up, or is the market going to offshore jobs? They're going to offshore profits. They're going to, start laying off people to keep their margins. Like, what is the market going to do? Are they going to stop doing buybacks because they have to pay that extra 10 billion Google was going to do buying back their stock they're giving to the government? Right? Like, I am really curious to see how this ends up playing out. And hopefully, we're all prepared for whatever way it goes, whether we have more tax cuts or whether Kamala raises the rates. But that is definitely going to be something that we have to look into over the next couple of days. Let's hear from Ed Yardeni, get his thoughts on what's going on with the market, and then we will keep going from there. June says billionaires are going to buy islands. That's a lot of paintings and islands will probably be bought if we have that tax rate.
We are back with the Dow on track now for another record close. The S&P 500 is lower today, but still around 1% from its own record. Here to share where he sees stocks heading next is Ed Yardeni. He's the president of Yardeni Research. Good to see you. Welcome back.
Thank you. Thank you very much.
Well, we've gotten through a lot, haven't we? Carry unwind, the econo scare, the Powell speech, and now NVIDIA is looming large. Do we have enough left in the tank to get over that hurdle?
Yeah, I think so. I mean, I'm not quite sure what you're concerned about when you say enough in the tank. I mean, the economy's, I think, is doing fine. I think the next batch of economic indicators are going to be stronger than expected because I think July's numbers were impacted by the weather. And if that's the case, then some of this concern about the weakness of the economy will evaporate, as it has happened in the past since 2022. And meanwhile, inflation is on course to be down to 2%. And the Fed's indicated they're going to ease. I think they're too dovish now, but I don't think that's going to be a big problem unless we get a melt up in the stock market, which is a possibility now.
I mean, I guess I would only say it's not like I'm concerned about anything. This market's been unbelievably resilient, right? I think anybody would say that, right. and it deserves as much credit. But at some point, does that resiliency run its course?
Well, I think when you said that I'm concerned about the Fed playing with fire, what I'm concerned about is that there's a lot of kindling wood out there. There's over $6 trillion in money market funds. Around $2.5 trillion of those are in retail funds. And if the Fed starts lowering interest rates too aggressively or communicating that they're going to be lowering them rather quickly here, you can have a lot of that money going into the stock market, going into the economy. And the other thing is for the Fed to essentially commit to a process of lowering interest rates for the future here is going to run smack dab into the next elections. And in the next election, we may have a Democratic sweep or we may have a Republican sweep. Either one of those scenarios could very well be inflationary. And the Fed, I don't think, wants to be joining that party. So I think the Fed should have just communicated September cut of 25 basis points and left it at that.
I mean, they all but did. I feel like that's what the market anticipates now. It's more of what happens next. Shouldn't that be our principal concern at this point? The pace and the size?
Yeah, my interpretation of Powell's speech is that it went well beyond just the 25 basis point cut in September and basically said that there's going to be an ongoing decline in interest rates because of the concern that the balance between inflation and unemployment of risks has turned more to risks of higher unemployment. I don't agree with that. And I think it's a mistake. And this wasn't really necessary. I think the Fed could have just signaled 25 basis points for September. I think they signaled a lot more beyond that.
Basically, Ed is saying, hey, I think the labor market is still really strong. I hope he's right about that. And August numbers are going to be fine. And like when we heard Jackson Hole, you basically heard the Fed declaring we're definitely going to get into the easing cycle. Ed is saying, well, they should have said we need to do a little bit of easing, but because the labor market is still really good, we don't need to do that much easing. We don't need to get into the entire cycle of easing. Whereas everyone else is saying, no, the labor market's not that good. One of them is going to be right. Either the labor market is going to be really good and the market's going to be fine with a rate cut, or the labor market's bad and a rate cut's not going to be able to save the market. The other scenario is the labor market's bad and then the Fed aggressively cuts rates 50 to 75 bips, and that doesn't tank the market, maybe doesn't explode the market, keeps the market afloat. gives you some time to maybe sell some positions and get out, or maybe it just takes the market higher because rate cuts are in general going to be bullish, but you have to deal with the inevitable pricing in of a recession if unemployment is going higher, because I don't know if rate cuts are necessarily going to stop unemployment from going higher in the medium, 6 to 12 months. It might take a year for that to actually play out. So that jobs report is going to be the most important thing that we need to look at. Now, someone in the chat, Thomas in the chat, said corporations have a buyback tax. I did not know corporations have to pay taxes on their buybacks. What I'm looking at right here is the new regulation is part of the broader effort to pay the 1% excise tax on stock buybacks, a key element of the Biden administration's 2022 corporate tax changes. These regulations take effect on June 28th, 2024, and apply to publicly traded corporations that repurchase their stock. I'll do some more research on this tonight, but if that's the case, then that just took effect, like in the summer, like a month ago, 2 months ago, if this is correct, which means the 1% tax you have to pay on stock buybacks. I did not know that was a thing. I did not know the IRS or Biden was making corporations pay a tax on their buybacks. If that just went into law, which it seems like it did June 28th, then yeah, now I guess if Google buys back $20 billion of stock, they're going to have to pay 1% on that. Oh, that was part of the Inflation Reduction Act. Interesting. That was part of the Inflation Reduction Act. Yeah, and it took place in June. It has not been live for the past 4 years. It took place in June 28th. Here's the website if anyone wants to take a look at it. I'll be reading this tonight. I don't know if that's a good thing or bad thing. On first hand, I think that's not the best because like that means corporations are going to do less buybacks, but I don't know. Maybe it's such an insignificant amount that it doesn't matter, but 1% does seem like it can turn into a lot and compound a lot. I mean, in general, I think corporations buying back their stock is good for shareholders. The problem is there is a divide between the shareholder class and then the average person that doesn't know what a share of a company even is. Because when I have to sell my Google and pay taxes, like the only reason I'm paying higher capital gains, higher taxes via my capital gains is because my stock appreciated. The only reason my stock appreciated is because Google bought back the damn stock, right? That helped my stock go up. So I still, inevitably, the government's going to get the money from the stock appreciation somehow, even if they don't get it from the corporation itself. The question around buyback taxes and corporate tax rates is, do you think Google should be in control of buying back their stock and then let shareholders pay the taxes, which includes the insiders? Or do you think Google should give some of that money to the government via a buyback tax or via corporate taxes before they decide to allocate money back to shareholders via dividend or buybacks? And the general logic here is if they have to give a lot of money back to the government in taxes, they're not going to have that much money to buy back stock, which means I'm not going to have that much share appreciation, which means I'm not going to pay that much more in capital gains tax. But I think there's a lot of different nuances to all those different scenarios. And so that's what I kind of want to explore over the next couple weeks and see what conclusions we can come to. And I think we have to look at history to get a better understanding of this as well. What's going on with Apple? Is Apple down right now in after hours? Where is Apple? Apple fell to 223. That looked like a little bit of a glitch, but it is down 1%. What happened with Apple? Is there any news on Apple? Let me check up real quick. That is a nasty red candle. It looks like that was a real red candle. It doesn't look like that was like a Google Finance glitch. It looked like it legit hit 223 from 227. That's a pretty steep fall for Apple, and then recovered quickly to 225. Why is it down? CFO's leaving? Why is he leaving now? Why is Apple CFO leaving? Chief Financial Officer Luca? They're getting rid of Luca? Dude, I love Luca. Interesting. I liked Luca. He was a little hard to listen to on the earnings calls, but I liked him. He knew his shit. He understood the finances. Why is he's being replaced by Kevin Parekh? Who the hell is that? Kevin Parekh. P-A-R. This guy sounds like he's Indian. Who is this guy? Kevin Parekh. Yeah, he's a Brown. A Brown replaced him, guys. We got a Brown. We got him in. This guy, whose profile picture looks like it's from 1995, this is the guy replacing Luca as the CFO? Dude, how are you a vice president at Apple and your profile picture is like isn't Apple the design company, the company that's all glitz and glamour? How is this your profile picture, bro? Come on, bro. What are we doing? Is this why Buffett sold half of his stake? What is going on, bro? Now, granted, is this bearish or not? I mean, I don't really know, dude. Is the CFO leaving that big of a deal? Is it that serious? Apple's down 1% on this news. Are you serious, bro? Is it that big of a deal? The CFO leaving? Now, if this is like a Zach leaving Tesla type of scenario, I don't know if Luca was that instrumental to Apple on the earnings call as Zach was, because the new CFO at Tesla he's a clusterfuck, dude. I can't stand listening to that guy. But Zach was amazing. So if this guy was that as important as him, maybe it's worth 1% down, but that kind of feels like it's not that serious. But there you go. Apple down 0.78%. And Apple, speaking of a buyback tax, dude, Apple buys $7 billion of stock every month. Apple has bought $700 billion of stock since 2013. And again, I told the story a long time ago, but for those that never heard it, the way it happened is Apple had a meeting with Carl Icahn in 2013, Tim Cook, and the stock was in the gutter. This was a couple years after Steve Jobs passed. And Tim Cook was like, what do we do to get the stock up? And Carl Icahn looked him dead in the face and he said, dude, buy back the fucking stock. And since that day, that was the one piece of advice Tim Cook took very seriously from outside advisors, and he started buying back a lot of stock. And then obviously, they innovated to an extent with AirPods and watches and all that good stuff. But when they started buying back stock, the street started getting very excited about them. And then they basically financially engineered their earnings per share growth every single quarter because they're not growing enough to justify the numbers they're putting up, but they're buying back stock. If they had to pay 1%, which it seems like they have to under this Biden proposal as of June 28th, it looks like they're paying 1% on the $7 billion that they buy back pretty much every month, which begs the question, are they going to buy back less stock to kind of solve that 1% they have to pay in taxes? And will that affect Apple shareholders? I think we're going to see in Q3 kind of how these companies ultimately go about that. Interesting. Did any of you know the CFO was leaving? Because I didn't know that. That seems like it caught the market off guard. Apple's still down 1% on this, bro. It seemed like it definitely caught the market off guard. Palantir down about 0.5%. SoFi flat after hours. NVIDIA flat after hours. IWM ended barely green. See, this is not a good sign, dude. Like, why is IWM not ending like definitively green when large cap tech is down? This is the part that annoys me so much about small caps. It's like, like large cap is down. The money should be rotating into small caps. And IWM is up 7 cents on the day. Like, I know last week was really good and like maybe it's taking a breather, but still, like, this is one of the days where it should be up a lot and it's just not. So, I don't know, maybe it definitively needs the rate cut and it needs good jobs data just to get a little higher. But this would be a day where I would imagine it goes up. Also, I made that watch list with leveraged ETFs. I have a bunch of them here. I'll probably add more. But you had a Tesla Bear ETF up 3% today. Apple ETF up about 0.3%. The bearish one down about 0.118. NVDL was down 4%. This is 5 billion AUM for NVIDIA, now 5.8 billion. That's a lot. Oh, there's another one, MSTX. Let me add that. Dude, this is a MicroStrategy 1.7x leveraged ETF. It already has 127 million AUM. Dude, this is like that to me is a bull market, bro. Who puts $127 million into, not one person, obviously, but you know what I mean, collectively, going into a MicroStrategy leveraged ETF when MicroStrategy is already leveraged against Bitcoin? Like, where is that money coming from, bro? Where is that money coming from? Like, it has to be coming from some respect in either leaving from other assets where people are taking profits, or from money market funds, or from savings accounts. Like, I don't know how you get 127 million to go to a leveraged Bitcoin, essentially degen play. Like, if Bitcoin goes up, this thing is going to the freaking moon because MicroStrategy is going to the moon. But if it stays stagnant, like, who would want their money to just be stuck inside of this, right? So maybe it shows the crypto markets are getting more liquidity, and in general, people have a little bit more risk appetite as well going into the end of the year. So that one is getting a little bit more momentum right here. Apple would rather give that 1% of the money of buybacks back to investors as dividend and let them take care of taxes. Yeah, that's fair. That's probably fair of what Apple would want to do. Everyone is waiting for Wednesday evening. That's another reason why I think things were kind of boring today. Because, I mean, really nothing. I mean, where did the S&P end today? S&P ended 560, down 0.24%. QQQ ended, yeah, all right, tech was a little bit heavier, down 1%. That's fine. But it relatively was a boring day because Wednesday evening is going to determine if we have a good rest of the year. I mean, it's really that simple. It's like it's Wednesday evening is going to determine if we have a good rest of the year. And I remember, dude, last time NVIDIA earnings was so good, I bought a bike. You guys remember that? That was what, May 22nd? I literally went to Walmart and I bought a bike after those earnings. I was like, you know what? I need a bike. Dude, I barely rode that bike this summer. I think I rode the bike like 10 times. I thought I would go for a bike ride every day. I realized I don't really care about riding a bike. Like, it's not that interesting. Like, it's just, I'd rather go for a run. Like, I've been on more runs this summer than the bike ride. But that's how bullish NVIDIA earnings won. I purchased a bike after those earnings. So hopefully these earnings live up to the feelings of wanting to purchase a bike. Are you going to return it if NVIDIA dumps on Wednesday? I might as well, dude. Might as well return it if NVIDIA dumps on Wednesday. Dude, I don't think NVIDIA is dumping on Wednesday. And someone's going to play a clip of this when NVIDIA dumps on Wednesday. But I just think the earnings growth is going to be really good. And if it dumps on good earnings, then like I don't care at that point. Like I can't control that. But if it's good earnings goes up, bad earnings go down, I'm in the camp definitively of good earnings goes up. If it's bad earnings, I was wrong on the earnings, but I don't think it has to be good earnings and the stock goes down, because I think there's so much momentum and excitement for NVIDIA at the end of the day. Bucket of mayo if NVIDIA dumps? No way, dude. No way in hell. Like, I'd rather bet a bucket of mayo on the rate cut versus NVIDIA dumping. I have more confidence in Jay Powell than Jensen Huang, and that's not because I don't believe in Jensen. That's just because Jay Powell literally told me he's cutting rates. Like, not literally, but you know what I mean, literally. And so did Goolsby, so did Bostic. Jensen, I don't know. We haven't heard from Jensen, dude. Well, actually, no, we did hear from Jensen. We heard from Jensen at that conference he did with Zucks. He was sounding pretty normal at that conference. He was sounding like a CEO who probably crushed this quarter. That was right after Q2 ended. So I would imagine that he's he sounded pretty chill. But then again, I don't want to give that much credence to that, because I thought about Zucks right before Q1 earnings and the stock tanked like 30%. And Zucks was like doing a bunch of interviews. And I was like, oh, Zucks crushed it, dude. Look at these interviews. Look how excited he is. And then the stock falls 30%. So you just never know, dude. You just never know what happens with the market. But I think we have a better chance of getting a rate cut than I think we have of NVIDIA absolutely demolishing earnings, just because NVIDIA has really tough comps to live up against. Now, I'm still in the camp that they're going to still demolish, because I'm bullish that those comps will not be impossible to overcome. Maybe a few quarters from now, it's like going to be like the comps are going to have to come down, because there's no way NVIDIA is going to be able to grow 300%. But I think this quarter, they're still going to be able to do well. I just think we're definitely getting a rate cut in September, regardless of what happens with NVIDIA. Chris says some perspective. Counters between 32 and 24 is consolidation. It's just breathing in and out. 18 to 22 would be a big dip. Below 12 would be tanking. Yeah, I agree. 18 to 22 would be a massive dip. 32 and 24, I basically said 25 and 35, Chris. So we're on the same kind of perspective there in terms of prices. Consolidation, in my opinion. Really easy consolidation. Just like NVIDIA from like 115 to 125. It was consolidation before August 5th, and then $90 to 125 kind of became the range. But usually there's a good $10, $15 range within a stock where it's consolidating, and it's very normal. And you're going to have a lot of people crying if Palantir goes below $30. I think that's I think that's naive at the end of the day. Like, the stock is expensive. It's not overvalued in my opinion, but it is expensive. Coming down would be very normal, very healthy. Now, if it goes below 20, I think that's a ridiculous dip, and that's probably recession happening. If it goes below 20, I don't think we get that. Last time we got that, Japan had to go down 12% in a day. So I don't think that's going to happen, but I think the dip from 27 to 34, even below 27 in that 25 range, is very possible for Palantir, and that's a great opportunity to buy some more shares and go long. David, thank you for the $14 super chat. Hey, do you think Rocket Lab revenue can hit $4 billion in the year 2030? So the revenue right now is about 300 million, right? Roundabout. If I'm not, no, about 400 million. They're doing like 90 million a quarter. So you want to get to 3 billion or 4 billion by 2030. I don't know enough about Rocket Lab's internal metrics and their launch business to see if they can get to that level. But I don't think they need to get to 4 billion by 2030 in revenue for the market cap to be considerably above 3 billion where it's at right now. Again, I don't have a big Rocket Lab position. I just, in general, I'm learning more about the company. There seems to be more of a community forming around it. So I'm interested in just learning about the stock. But I don't know. I don't know if they can 4 billion. They're doing 400. They'd have to 10x their revenues, right? Because right now they're basically doing 400 million. So within 6 years, 10xing their revenues. That's a lot to ask for, dude. It's a lot to ask for. 10x their revenues, meaning revenues go up by 1,000%. So then a CAGR would be over 6 years, basically closer to, more than 100% a year. Like that's tough, dude. I think that's a little tough to get to. But regardless, I think Rocket Lab will be, just based on SpaceX's TAM, more valuable than it is today, which is not horrible. Meta went from 384 to 88. If you liked it in the 300s, you would love it at 88, although it sucked if you were holding. Patience if Palantir drops hard, not financial advice, just my opinion. Yeah, I agree, dude. Dude, I mean, as much as it would suck if Palantir goes back to $20, I would be a little annoyed, but I would get out my pocketbook and start depositing some money into good old Robinhood and start buying some damn shares. Like if we get Palantir back at 20, given my conviction on it, if it's just a macro drawdown, just like Meta, I mean, Meta was a macro drawdown because 2022, everything bottomed, right? So I think first and foremost, it was macro. The second reason was because the street was so upset with the Reality Labs nonsense and they didn't see any progress from the metaverse, et cetera. So you had to see a little bit beyond the horizon around how the metaverse would inevitably play out. And I don't think anyone expected this whole generative AI thing, but if you trusted Zucks a little bit, you believed that the overall cash flow on the ads business was enough to subsidize the metaverse. And then trading at an 8 PE, it seemed obvious that, well, Meta's probably going to, be trading at a 30 PE one day. And so you have to take a little risk. So if Palantir gets down to like a 10, 15 PE, I wouldn't be the saddest in the world at those levels. Let's get one final update on this Apple iPhone 16 event. And then we'll be done for today.
What are we going to expect? What's up with the name?
Yeah, so glow time, and if you look at the graphic, that's actually in reference to the new user interface for Siri that's coming to the new iPhones this year, as well as last year's iPhones, as part of Apple Intelligence. You see it on screen right now. When you press the side of the phone or activate Siri, you sort of get that color effect on the rim or the bezel around the iPhone. Same as on the iPad, same as on the CarPlay, and those colors are through the Apple Intelligence user interface. So clearly a reference to that being a key focal point of these new devices.
Holy crap. Kava just announced an offering. Holy crap. Thank you for that comment. I did not know that. Of course they did. American capitalism, baby. Of course Kava announced an offering. I'm not going to buy the 16 because I upgraded last year, so I'm not going to buy the 16. Wow, it's down 5%. I mean, can you blame them? The stock's up. Didn't we talk about in the morning how I felt like Kava was getting a little overvalued? And I had no real intuition. I mean, I only had intuition. I had no kind of financial justification. I was just like, dude, it's up 200%. Like it's a restaurant. Like I know it's growing, but this is a bit ridiculous. There you go. An offering. An offering means they're offering more shares. Now, is it a shelf offering or is it a at the money they've already done the offering? So in general, an offering means like, so Kava has how many shares? They have 114 million outstanding. I mean, let's pull it up right now. They could have offered 10 million shares at a fixed price, and that could have diluted investors by 10 million shares, that would be about 8% of the shares outstanding, which is not good. It's not the worst thing in the world. It's just one of those things that, companies do when they are in growth mode. It just like sucks for investors. Now, granted, if you've owned Kava since the beginning of the year, you don't really care that much, but if you just bought in, that's a little annoying. I can't find it on their website yet. I don't think they posted on their IR page, but I'll get that information probably tomorrow morning. I don't see it on the actual website. Let me see if Twitter has it. I'm curious, how much did they dilute by? Yeah, it's not on. I don't have the exact number on Twitter yet. Insiders did sell a ton today on Kava, so we had a bunch of insiders sell. Wow, 500,000 shares were sold today across Kava insiders. Okay, so you got insiders selling, and then you have a dilution via an equity offering down 5%. Now, again, Kava's only up 195% year to date instead of 200%. So, again, if you're a long-term shareholder, you don't care. In fact, you're happy because they're raising money at really good prices. Like, it's better to dilute when the stock, that's what GameStop did, right? GameStop, when the stock went to, I think, 27, they issued $4 billion worth of stock. That's how they got their cash to go up. Or sorry, they issued 1.9 billion. So they got their cash to go from like 2 billion to 4 billion, which was really good for GameStop. But if you bought in at 27, 28, the stock tanked after that because they ended up selling you those shares. And they didn't do a shelf offering. A shelf offering is when the offering is literally put on a shelf and it can be like revisited at a future date. And at the market offering means it's dumped immediately. That means during the trading day, the company literally printed, for example, 10 million shares and they dumped it and someone bought it. And that is where the dilution happens. And it's obviously kind of annoying for investors, but if you've been in it for a long time, then you probably don't care that much if you're down 5%. But interesting that they did that today, and definitely not surprising that they did it. What's the benefit to doing an offering to the company? Raising money. Mega caps will never do it. NVIDIA has enough cash. Google has enough cash. Like if you have cash, you don't do it. If you don't have cash, you do it because you have a opportunistic time in the market to raise cash at a really good price. I mean, if someone is willing to buy 10 million shares of Kava at $130 when the stock was at like $40 in the beginning of the year, it's way better to do the offering when someone's willing to pay 2x the amount they were going to pay, or 3x the amount they were going to pay versus at the beginning of the year, because you just raise more money, right? 10 million shares times 140 is, or 120 is way more money than 10 million shares times $40. So it's just beneficial for the company, but it is a little annoying to shareholders. At the end of the day, I don't think it's that big of a deal, but it's something that I mean, I don't want to say I expected it, but it just felt like Kava was getting a little pricey this morning, and obviously the insiders decided that it was time to raise some money.
Mark, what can we anticipate in terms of actual functionality and other products?
So the three things that I'm expecting on the 9th are the iPhone 16, which is 4 models, new AirPods, which is 2 new versions, as well as new Apple Watches, which is 3 new versions. So it's going to be a fairly jam-packed showcase on that Monday. The iPhones, not major overhauls, but you're going to see new processors. You're going to see a new button, which is a dedicated shutter button for taking pictures. And on the Pro models, you're going to see slightly bigger displays. The AirPods, the non-Pro ones, are being revamped. So you're going to have a new entry-level AirPods for the first time in 5 years, as well as new mid-tier AirPods for the first time in 3 years. Those are going to have some Pro features. The mid-tier ones specifically are going to have a similar charging case with sound as the AirPods Pro, as well as active noise cancellation. And then the third thing are the new Apple Watches. You're going to see a new low-end Apple Watch with a move to plastic for the first time, which should make it a little bit more kid-friendly. They've been pushing that idea, using watches instead of phones on children, in schools particularly.
Yeah.
You're going to see a new mid-tier watch. That's their flagship, the Series 10, thinner with bigger screens. And then you're going to see an upgraded Apple Watch Ultra 3 with some of the new health features also coming to the Series 10.
Hey, Mark, I know I have you on the spot right now, but this headline just crossing that Apple is replacing Luca Maestri as its CFO. Instead, Kevin Parekh will be taking that role as CFO. Do you have any reaction to that? The stock is down by about 1% post-market.
Not surprised. We've been hinting at this for some time that Luca is being replaced with Kevin Parekh. We've reported several times that that's happening. Luca had been in the role for nearly a decade now. Kevin had been the heir apparent, and it's become obvious in recent months, and we've been flicking at that in our articles recently.
Well, it obviously wasn't obvious to the market because the stock is still down on the CFO news. It's so interesting, dude. So interesting how the market can react to these things. I mean, like you have one of the biggest Apple Bloomberg reporters for the past year saying Luca's going to be replaced, and then the day it happens, the market acts like it's some big surprise. So that's why the stock is down right now. In terms of what he said for the event, not going to be that interesting of an event, in my opinion. The only thing that I care about is finally upgrading my current iPhone 15 Pro to the AI features. Obviously, the AI upgrade cycle is very, very important for Apple. I think the watches are going to be a dud. I think the AirPods are going to be a dud. I think the phone itself is going to be a dud. There's going to be nothing interesting around the new devices. Kava, by the way, now down 7%. But the software is going to be the thing that people care about. Now, granted, because we're supposedly in an upgrade cycle, and even some people in the chat here are saying they're finally going to upgrade from their iPhone 12, you would imagine that upgrade cycle happens and, it ends up being really bullish. But I don't think they're going to give you that compelling of a reason to upgrade outside of the fact that people just haven't upgraded for years. This is an example of what this iPhone might look like. A lot of people are saying it's going to be really thin, 6.6-inch display, 2740 by 1260 resolution, ultra slim design, A19 chip, single rear camera. So that this little hump on the phone that you guys look at this. This thing has always been a weird design thing to me. These 3 cameras right here. Like, it's always been a little weird having this type of bump. It seems like they're changing that, or they're trying to change that. And it kind of looks like a pixel, right? Yeah, it kind of looks like a pixel. I don't know, dude. I mean, look, I've had an iPhone since 2010. I have literally had an iPhone my entire life. I will have an iPhone probably for the rest of my life. You know, I don't blame Apple for not innovating on the iPhone. People might think I sound bearish on Apple. I actually believe that Apple is just, they can't keep adding more features to this iPhone because it's already perfect. Like, I think the iPhone is so good. There's nothing more I expect from the iPhone. So I think Apple has to find other ways to grow. The Vision Pro, unfortunately, just wasn't the best way. They've got to think of some new ways. And I know that's really hard to do. It's not an easy thing to do when you're at Apple size, but that means then maybe you need to give a dividend. Maybe you need to like think of becoming more of a value stock instead of a growth stock, right? Like, this stuff happens. But I don't think the iPhone needs to be constantly reiterated. Although it would be crazy if Apple comes out one day and they say, hey, the iPhone 20 is our last iPhone. We're going to keep making it, but we're not going to keep upgrading it. I think the stock would go down 50% in a day, which is sad because I don't think they need to keep innovating on the iPhone. Like, maybe every 3 years, but every year to have the pressure to release an iPhone. Like, I cannot imagine the stress Tim Cook has to go through every year, knowing as soon as you release the latest iPhone, the next year, you have to think of what's the next version. And you're like stuck in a room with some of the smartest people in the world trying to think, how do we make this thing even better for people to buy? Like, it has to be the most like annoying thing ever. And I wish investors would not kill them for not upgrading the phone. But at this point, because Apple's not growing anywhere else, like literally everything outside of services, there's really no growth. You've got to double down on the iPhone. They did $90 billion of revenue last quarter. 45 out of the 90 billion was an iPhone or was iPhone revenues. So the iPhone obviously is the biggest thing around Apple. And I hope AI ushers them into a new services era growth. Dan Ives was talking a little bit today about how they could charge $20 a month for like some type of a service via Apple AI. I don't know. Maybe that ends up taking off, but they're probably gonna have to find some level of growth besides the iPhone. Better batteries would, yes, better batteries would be my bull case. Now, granted, I don't know if battery technology is good enough yet. So if they make an iPhone that can last for like a week without having to charge it, which I don't know if that type of battery technology exists, maybe a Novix could help out there, but I would pay a lot of money for that because I get so annoyed having to charge my phone, dude. It's like the most annoying thing in the world because I'm on my phone all day, so I constantly have to charge it. I've never used the pager. Yes, I've never used the pager. But if they make a new battery for the iPhone, I think that would be exciting. Yes, I've had an iPhone my whole life. It's kind of crazy. I got an iPhone in 2010. It's not literally my whole life, but since I entered 7th grade, and since then, dude, I've had an iPhone. So it's for just one of those things where I had a flip phone before that in 5th grade, but realistically, I've had an iPhone my whole life. So I'm used to upgrading my phone, but like last time I upgraded to the 15, it was after 3 years. So I understand the people that are upgrading this time, but usually it's after waiting a long time because it just doesn't make sense to pay that much more money every single time. All right, that is it for me. Thank you, everybody, for joining. Hopefully, you guys had a good day. We'll have a Daily Palantir coming up in a couple hours, talking through a lot of different things that came out. Oh, let me show this one video before we leave. So Palantir posted a video today, and it was recapping AIPCon. So I did make an appearance in the video a couple times, but this is what happened at AIPCon. Let's check this out, and then we'll be done for today. So this was their AIPCon 4 recap from June.
This is our 4th AIPCon inside of 12 months. We have more than 70 customers speaking on this stage, and we're so excited to be here to share that community with you.
We launched AIP just over a year ago. Our central thesis around what would make AI valuable was really taken from a lot of our insights on the battlefield.
The best innovation comes from those people that are working on the front line.
This is Gartner. 80 to 90% of these analytic programs tend to fail to execute. On the technology side, we were looking for a partner and an approach to our data strategy, if you will excuse the term, that actually produce shit.
We chose Palantir because their products are absolutely best in the class.
By leveraging this technology, we're sending people home to their families, where otherwise they might have had a different outcome.
So far, we've saved over 100,000 customers from delays and cancellations.
We've successfully connected over 85% of our systems. and built more than 100 applications all by ourselves.
We have seen the 60 million US dollar improvement in profit, and we expect an additional 100 million US dollar over the next 3 years.
Because as a not-for-profit organization, every dollar counts. We are Palantir's house band, the Seeing Stone.
Pretty cool video. Pretty cool video by Palantir. That was their AIPCon recap. I actually didn't know they worked with Moody's. That was another client we got at the end of that video. They said they showed off all the clients, and I didn't know Moody's was a client, but it is a client for Palantir. So not bad. Pretty cool stuff. Another daily Palantir episode will happen in a couple hours, and I'll see you guys again tomorrow, 8:45 a.m. We have no major earnings today after the bell. Tomorrow we have, nothing really tomorrow. Wednesday is the big day. NVIDIA, Salesforce, CrowdStrike. That's the big day on Wednesday. And we'll see what happens there. Thank you, everybody. Have a good one. I'll see you guys tomorrow morning, 8:45 a.m. Bye, everyone. Good night.